how using boring strategies made me 11% last month. And even better, I didn't place the trades myself, my computer did. So here's my equity curve over the past month. And I will say most people think my trading is kind of boring. And to be honest, I probably do too. I talk to a lot of traders almost every day, and they always have cooler ideas, more interesting trades than me, normally bigger size on each individual trade, all those sort of things, right? But at the same time, I know I couldn't perform this well if I did what they did. For me, algorithmic, systematic, mechanical level of execution is what got me to 11% this month. So in this video, I'm going to go over my performance and some of the nuances of it. So first off, as I kind of just showed you previously, this is the equity curve over the past month. This is compiling together like all my trades from my futures automation and then also my crypto automation as well. I'll be going more into that in just a second. But as you can see, it was somewhat like a decent month, at least for growth. There was obviously a decent amount of volatility, but we're overall trending upwards. You know, technically, if you're trying to like do technical analysis on this, right, like there's kind of like a trend line or whatever. But for the most part, it was trending upwards over the whole month. So it was a very nice month, especially the start. I pretty much got to about 5% or so quite fast, really, within the first couple of days. And then from there, trailed back some, and then it's kind of been continually going up. So let's go into kind of each strategy performance. As some of you might notice, if you've watched any of my other kind of recap videos, there's normally about 10 strategies kind of here, or 10 column or 10 rows, for example. Whereas today, there's 11. And the 11th one is I was able to compile a lot of my crypto automation into this. So I can kind of put it all into one nice view for you guys to look over, and then also for myself. Took a bit of Python and kind of configuring the CSV so that everything could compile together. But for the most part, it actually has worked quite well. If you're new here and you're wondering why do I blank out the names, it's because I run a lot of backtests and I also run quite a lot of strategies. And each individual strategy is named very explicitly of what it's doing. And at least at the moment, I'm not kind of going into that detail. So for my net profit, you'll see there's a lot of kind of minus 1% or about minus 1%. There's a couple of break-even ones here and there. And then we have an outlier one of 5.7%. If any of you were to guess what one is that, it's probably going to be the crypto automation. And this one took 18 trades over that time, had a 3.83 profit factor, and a very, very little kind of like drawdown over that period of time. Now, this is taking into account the whole capital size. So that doesn't mean absolute returns necessarily with 5.7% on those trades. It was that overall for this particular capital. And then we can see a couple of other future strategies did quite well. We got a 1.86 over here and a 1.33. I will actually say, ironically, one of the best performers in my future strategies was a really simple Bollinger Band and like RSI strategy. Normally, it's doing like a not too amazing performance each month. It's quite a steady performer, let's say. But this month it went really well, and I think it did above 1%. If I remember, I think it is this 1.86%, which I was really surprised by. Next, a metric I haven't actually shown before, but I thought it would be interesting to kind of go into is trade via duration. So how long are my trades being held for? And then basically that's plotted over all the trades that were taken over the last month. So we can see there are obviously some trades that are hitting the 5 and 10 minute. Now, I will say that's normally losers that are getting instantly stopped out or just a trade that instantly goes wrong. Because most of the time for a lot of my portfolio, I am doing trailing stops or volatility based stops. So I wouldn't expect them to get hit in the first 5 or 10 minutes if it was like a profitable trade, because most of the time it'll trail. But if once the initial entry is taken and price dumps or something like that, then that's kind of where I'm getting stopped out quite quickly. The rest of these, as you can see, my kind of sweet spot, let's say, is around the 4-hour mark. The reason being for that is a lot of my strategies run on the 30-minute, 60-minute, those sort of time frames. I've never had much success with 1-minute time frames or 2-minute time frames or anything really that low. Most of the time, even for mean reversion, these sort of time frames work quite well for me intraday. Now, obviously, we do have a couple of positions here holding for multiple days. A lot of these are the crypto positions, or I do have a couple of swing strategies in futures as well, which trade on lower size. Obviously, because of the swing position, I have to be careful of gap risks. But swinging, especially in indexes, can actually do really well. And I've also seen, while I haven't traded it that much personally, equities right now for swinging positions has been on fire. So there's been a lot of those sort of traders doing very well on breakout sort of strategies on equities. Next, I always like to show the short to long based kind of trades. Ironically, I think this is the exact same percentage as last month, 29% and 71% for longs, and then obviously 29% for shorts. This is pretty much the happy medium for me. I never would be really expecting 50 and 50%. The reason being is most of the time short trades are a lot harder to be profitable on, especially because most markets, at least at the moment, and for a long period of time, if you look, zoom out, they're normally trending up higher. So it's very difficult to be, profitable over a long period of time, just kind of shorting. And normally what you'll notice is shorting will normally happen all, let's say, in like 1 month. There'll be a month where there's a lot of good short opportunities, and that's where you're going to make your money on shorts. The rest of the time, it's normally just kind of losing a bit, at least from my experience. For how this looks in P&L, if you've watched this before, you would have guessed it straight away. Short is red, lost about 5%, and then the rest basically of P&L came from long base, which is totally fine. I'm happy losing a bit on shorts just to have a bit of that diversification as well. And obviously, that means when those months do appear, then the shorts can carry the long positions and smooth out equity returns. Now, some of you may be wondering, how does this actually look without crypto, right? Because that's a 5.7% gain. It's a pretty decent added to the month. So this is how the equity curve looks with just the futures automations. I run right now about 10 futures automation strategies. It's a mixture of intraday and swing strategies. So you won't always see all 10 strategies execute on a particular month, depending on volatility. And the reason I do this is, if you haven't watched, I think it's the video titled like the Holy Grail. Diversification is a really big part of my algorithmic kind of portfolio and I guess strategy to trading. I like to diversify between trend following, mean reversion, a couple of other strategies here and there. And that, for the most part, can give me the most stable returns, even while I am taking on a decent amount of volatility. If I wasn't doing this, I'd be suffering way larger drawdowns, at least from a lot of my backtests. And then talking to people that are smarter than me would also probably agree with that sort of idea. So for just futures automation, we did about, I think it's about 8% or like 7 point something percent, which is very good. It's still an outlier month or a very high month, let's say, for performance. And I think this is because we had quite good trending markets for the most part, and we had some very good trending days. So for the most part, all my trend following strategies were very much in the green. And then as a lot of the kind of mean reversions ones were either like minus a percent or around break even. So it wasn't a terribly difficult month to go through personally. Also, if you're wondering why there's such like sharp upticks, that's normally a characteristic of trend following models. You'll go a period of time where you're kind of losing. Now, obviously, these are padded out because I also have mean reversion strategies working. So sometimes you'll see smaller upticks here and there. But then when trend following really works, like you have a great trend following day, it's normally a huge P&L day, and that kind of like boosts up returns. And this is via by trades, not by day. So each trade you can see here is like a big uptick on, like, let's say a one winning position on trend following. Personally, I always think you should look at most of your equity returns or equity curve, via trades count. At least you should be able to see how that looks. And then obviously you can view it by day, week, and month. It depends on your strategy, but at least for me, I like seeing it via trades because then I can see actual the volatility that's going on. Now, next, how did I do this? This is probably the most common question I get. So a lot of my automation is run through NinjaTrader. That's all for futures. They do allow, I think, Forex, like currencies as well. I don't personally trade that. So a lot of the NinjaTrader side of things, I'm just working with futures. So ES, NQ, YM, CL, all those sort of instruments. And then the rest is just via API. So direct API to their exchanges. For example, for crypto, just straight to Hyperliquid or Binance. Or if I'm doing like equities, if I was, for example, doing like a long breakout strategy in equities, it would normally be through Interactive Brokers. Or through DAS as well, if it's like more for small caps. If you do want to check out how I build momentum strategies, I'll leave a link to a video I recently published around how I do it and why I focus a lot of momentum in crypto at the moment. And as a kind of a spoiler, it's just you can get the higher returns using very similar strategies you would do in futures and equities, but you can get higher and above average returns in crypto compared to all the other assets. Normally that is a factor because you have more variance and volatility, but if you want to learn more, definitely check out that video.